Welcome again to today's webinar. My name is Anne White and I'm Head of International Trade at Thames Valley Chamber of Commerce. Thames Valley Chamber of Commerce is the accredited chamber for Buckinghamshire, excluding Milton Keynes, Berkshire, Oxfordshire, Swindon and Heathrow. So it's quite a large chamber, a large regional chamber, and we had a dedicated team of over 18 who deal with international trade, from whether it be trade promotion through to trade facilitation. So we'll just hear a little bit more about what we do, some of the things we have coming up a bit later in the webinar. But as for today's webinar, the topic is trade finance and how UK export finance can help with making your life when you touch export easier. The webinar will highlight how the UK export finance services can assist the UK businesses to export products and services overseas. When it comes to exporting, having a great product or service is only half of the story. Putting the right finance and insurance in place can make the difference, helping you win contracts, fulfill orders and getting paid. So UK Export Finance, working with over 100 private credit insurers and lenders, help businesses across the board with UK access to UK export finance and insurance. So our speaker today is Richard Armstrong, and Richard is the one of the managers at UK Export Finance. He covers this, if I get it, hopefully I don't get it wrong, Berkshire, Surrey and Hampshire. Is that correct, Richard?
That's right, yeah.
And he helps you, contacts the businesses, helping them to achieve what their export ambitions are in relation to trade finance and insurance. Richard has a history and in-depth knowledge of structured trade finance and portfolio management, specialising in export credit and commodity finance over a number of major international and domestic banks. So without further ado, I'm going to pass you over to Richard, and I'm going to turn my camera off, and over to you, Richard.
Thank you, Anne, and thank you for that kind introduction. Yes, good morning, everyone. As Anna said, my name is Richard Armstrong. I'm one of the export finance managers at UK Export Finance. There are about 25 of us over the country, all dealing with different areas. You'll be pleased to know in the Thames Valley, I think you're likely to deal with probably about 4 of us, judging by the counties that Anne read out. So what I want to do today is tell you about UKEF, what we do and what our products are, and to see how we can help facilitate financing of exports. I recognise that some people on this call will be very familiar with us and some may never have heard of us at all. So I'm going to try and pitch things with that in mind. But just to talk first of all about UK Export Finance, who we are. Next slide, please, Anne. Lovely. Okay, well, whilst we try to sort out the technology, we're the UK's official export credit agency. We've been around for over 100 years. We were established in 1919. We're a part of the Department for International Trade. We work very closely with Her Majesty's Treasury and a whole host of private lenders and credit insurers. We're about 450 people based in London, plus 25 export finance managers dealing with businesses throughout the UK. And we also have presence overseas. We have international export finance executives, and they're based in key destination export markets. So our job is to complement, not to compete with the private sector. And I'd like to look a little bit about what it is we do. We provide finance to overseas buyers of goods and services, and we provide guarantees to banks in the UK to support exports, mainly for working capital and bond support. And we can also provide export insurance. One thing is critical to understand at the outset: we don't provide grants. That is not part of what UK Export Finance is about. So next slide, please, Anne. And this is an important mission statement. is to ensure that no viable UK export fails for lack of finance or insurance from the private sector, while operating at no net cost to the taxpayer. And that's very important, that the Treasury get a little bit upset if they think that we're going to lose money on any of the transactions we've underwritten. And of course, that ultimately boils down to the likes of being used taxpayers. So there is this huge emphasis on what is a viable export and at no net cost to the taxpayer. So next slide, please. So we're agnostic in terms of where we can provide our support, goods, services, and intangibles. And we can support SMEs right through to large corporations. During the last financial year, there was support provided to over 200 countries, and we also have the capacity to provide support in local currency. Next slide, please, Anne. Lovely. So just to put some numbers in perspective, UK Export Finance as a whole provided over £12 billion worth of support for UK exports last year. Now, I think it's important just to put that into context. A majority of that number is made up of support provided to some of the bigger companies in the UK, whether that's by providing support to overseas buyers of UK goods and services for some of the larger projects which have taken place, or whether it's balance sheet support for those businesses which are looking to grow overseas. And you would have seen very recently that we provided support, for example, for the likes of Jaguar Land Rover. But of course, when we do provide support to those large companies, the knock-on effect is all the way down the supply chain. So all those companies that supply, for example, for Jaguar Land Rover, they will benefit from our support being in place. We've calculated that we've supported 549 UK businesses, and that's estimated support of about 107,000 jobs in the UK. Right, so I will now delve a little deeper into some of the products, just to explain how we actually support. So on the next slide, you will see that we've broken down to three categories. Buyer finance, so this is really aimed at the overseas buyers of UK goods and services. This is not an area I'm going to focus on today, but rather the next column, which is our export guarantee products. These are aimed at UK exporters, and they address working capital and bond supporting needs, and are delivered in partnership with banks which are signed up to our schemes. And that they are, so they're the main high street banks, plus we are now looking to onboard non-bank financial institutions to try and broaden the reach of the financial markets and how they can access our products. The final column is our insurance. So that this is an export credit insurance policy, which I'll talk about as we go through. Next slide, please, then, Anne, and we can look at our exporter guarantee. So on the next slide, we have a scheme which has been around for a few years now. It's called our Export Working Capital Scheme. Effectively accessed through banks. So banks make loans to UK exporters for working capital purposes. This is in support of specific contracts. The risk is on the UK exporter, and our guarantee can be for up to 80% of the contract value of the bank's risk, I should say. Typically, that could be 80% of the contract value. We particularly see this scheme come into play where either an exporter has a contract which has a higher value than normal, or there is a need to finance defined upcoming contracts. So the scheme has been around for a number of years now and has broadly been replaced by our general export facility, which I will come on to in a few moments, but still very relevant for a contract by contract support. So next slide, please, Anne. So allied to the Export Working Capital Scheme, there is a separate product which guarantees bonds. So when we're talking about bonds, there could be bid bonds, advance payment guarantees, performance bonds, typically retention and warranty bonds. Now, these instruments are typically issued by your bank. The As far as the bank's concerned, the beneficiary of the bond can put a claim on the bank, which it will have to pay immediately. It seeks recourse to the exporter, the UK exporter, and it does this through a counter indemnity, but often will insist on cash being pledged in the event of a bond call. One of the uses of our products here is that the bank can instead look to us to provide our guarantee, i.e. we take risk on the UK exporter, freeing up the requirement for cash to be locked up in the business and freeing it back into general working capital. Very similar to the export working capital scheme, we can provide guarantees for up to 80% of the bond value, risk on the UK exporter, and again, access through participating banks. So this is just a flavour of products which were introduced about 10 years ago. But last year, we operationalised our general export facility. And on the next slide, please. And thank you. So this is built really around three key themes of accessibility, flexibility, and certainty. But just to, as the name implies, it is a general export facility. And we've taken soundings with the banks, with the exporters. And one of the key things we have been able to provide support around is removing the need for finance to be linked to a specific export contract. Instead, as the name applies, it is more general. And the next slide will detail what those eligibility criteria are. But again, important to understand access directly through participating banks, risk on the exporter, 80% of lender risk taken. So very similar to the bond support and the working capital schemes. Our maximum guarantee period is 5 years. And typically the maximum value of a general export facility will be up to 25 million. For amounts in excess of that, and I know there'll be some smaller companies thinking, well, we could possibly go that far, but clearly there are a lot of bigger boys out there, and where that requirement is in excess of 25 million, there is a separate product called the Export Development Guarantee. We used to know them internally as Little Jeff and Jumbo Jeff, but now they've got names in their own right. So the General Export Facility is really the one we're focusing on now. So if you could be so kind as to go to the next slide. I think there's might be one before that, which just says eligibility criteria. Okay, not to worry. So in terms of the eligibility criteria, what we need is we've adopted quite a broad definition of what is a UK exporter. And we do a very simple test based on the export sales figures. So where export sales represent at least 20% of a company's annual turnover in any one of the last 3 financial years, then the business can be eligible for GEF support. If a company is unable to achieve that, we recognise that whilst that is quite a generous definition, some businesses are building up, they're looking to expand, they're looking to grow, they're looking to expand into new markets, some exporting for the very first time. Then we have an alternative test, which is based on 5% of the turnover being export sales for each of the last 3 years. So it's either 20% in one of the last 3 or 5% in each of the last 3. So what we have done is we're saying this is a general export facility. We've removed the need to be tied to a specific contract. We need to see a business which is based in the UK, it's paying its taxes in the UK, employing people in the UK, but not necessarily manufacturing in the UK. Providing that those tests can be reached, we can look to provide support. Now, the nature of the support will be determined by the banks that are signed up to our schemes. So some banks will maybe look at a business turnover threshold to see whether this is a suitable product for that business, or they may well only support certain facilities, for example, import loans, export loans, typical working capital loans. But of course, the GEF does enable businesses to support bonding, as in under the bond support scheme, and also it's sufficiently flexible that we can also look at invoice discounting. But that will depend very much on how this product is used by your bank. They will each have individual risk appetite. So really what we're doing, I think, is providing capacity to the banks, and it enables, and I'm just going to go around these three key themes, which will hopefully make things a little bit clearer. So accessibility, the scheme is available for up to 2 years. There's 80% of cover available from UKEF. Where the deal is up to 5 million in value, we have given delegated authority for the banks. This smooths the application procedure. For amounts above that, then we would look at a manual inclusion process, which will require our underwriters to look at the individual risk. This can add a little bit of time to the process, but typically we're seeing a large volume of deals coming in below that 5 million threshold. In fact, the scheme, since it was launched about this time last year, or operationalized this time last year, it was actually launched in December 2020. We've seen uptake far exceed our own expectations, which is fantastic news. Now, when I said earlier on that we were agnostic around sectors, we do have exceptions around controlled sectors. So that would require examination, particularly around the oil and gas, for example. But tobacco, pornography, that type of controlled centre, our support is not eligible. I've spoken about the simple eligibility rules, i.e. based on the profile of a business's turnover. So next slide, please, Anne. So the next thing we've built this around is around flexibility. So it's a general banking facility. It can be used for both domestic and international business, provided that that turnover test is satisfied. And I think particularly where businesses and banks have been looking is where, for example, a business imports from, say, China. Those goods don't necessarily touch UK borders before they're delivered to third-party destinations, but we would need to see that the value add in the UK, i.e. in terms of there are premises, there are people, there's logistics support, there's P&L, there's marketing type support, and providing that the business can demonstrate that our eligibility criteria in terms of overseas sales are met, then Jeff can be an eligible product to be discussed with the bank. Ultimately, the bank will decide, but we do provide that flexibility in the background. I stated earlier that the facility can cover bonds, both export and domestic, import LCs and trade loans, and we can also, as well as tenor, i.e., once transactions go beyond 5 years or they go above 5 million, then there will be a manual underwriting process. So the next slide, please, Anne, which is around certainty. There's those eligibility criteria. It must have just swapped places somewhere in the pack. So sorry about that, Anne. Yeah, so I've talked through that slide. So if we can quickly go to another green one, that's it, with the certainty. So one of the beauties of the facility is it can be put in place in anticipation of a future need arising. So we're not just looking at one particular contract coming up, talking to the bank, getting the facility in place. There can be a degree of anticipation and planning. So fully, one of the next point there, no delays for agent checks under the export working capital scheme, particularly where you're using third-party agents overseas. There is full due diligence undertaken on that agent. Here we're now looking at a much lighter touch. So we're not seeing some of the delays that have previously arisen. So that really just gives you a flavour of our insurance products and how we work with the banks, or our guarantee products. So the main high street banks, they've entered into master guarantees agreements with us. It defines how we work with the banks, and we would always recommend a discussion with your banker in the first instance in terms of risk appetite to support your bonding needs or your working capital needs. Now, this can either be, we may be in that nice situation where the bank says, absolutely fine, we like the risk, we want to support you, we don't need UKEF support, and we're absolutely fine with that. As I say, we complement by way of providing capacity, but the banks themselves, particularly through their trade finance specialists, they will know whether the business is potentially eligible for GEF support, and they can introduce that into the conversation. So very important to involve your relationship and your trade people within that conversation. Okay, so moving away from the banks, the next slide concentrates. Okay, all right, okay, I'm going to quickly backtrack. So I have discussed these already. In terms of the eligibility criteria, the business has to be carrying on the UK. We have to see that there's goods and service. We have to see that there's UK goods and services. There's real value add. So if I can just actually, if you wouldn't mind just going back a slide. And okay, right, there should be one there which says export insurance policy. So I think it's the next one. No. Not quite sure how these have come out of order, but let me talk. Okay, let me talk about export insurance. So apologies for any confusion. So we've been focusing on the guarantee products, which are delivered through banks. We now look at our insurance products. Now, these do not require bank intermediation, and it is possible for exporters to approach us directly for insurance. And we're basically covering non-payment by your overseas buyer, and we can cover up to 95% of the contract value. And what sort of cover do we provide? Well, there's insolvency of the buyer's failure to pay, or indeed political or economic events within the country, i.e. outside of the United Kingdom. Now, it's possible to access this product by applying to us direct or through your normal broker. But one thing we absolutely have to emphasize, and this is going back to my point that we complement, not compete with the private sector. A business has to demonstrate that its broker cannot find capacity in the private commercial insurance market before approaching us, before we can start looking at buyer names, which we can do on an individual basis. And I know there was a question that has come in around, what sort of markets can we cover? Well, at this precise moment in time, we can cover global risks, but buyers in any destination we can look at in theory. Obviously, there's some countries that we clearly can't look at. But that situation will only exist until the 31st of March this year, because there was a in response to COVID, we were allowed to cover some of the higher income risk countries, particularly aimed at the EU, businesses in the EU, so OECD countries. As from the 31st of March, it is unlikely that exemption will be continued. So it will be unlikely that we'll be able to cover OECD markets going forward. So we'll be going back to what the product was originally designed for, which is to look at some of the more of the emerging market risks. And so there is that slide there which says eligibility criteria for exit. That's the one. So what do you need to do in order to come to us? Well, first of all, you need to demonstrate a lack of availability from the private market. You must be a business which is carrying on its activities in the UK, and this will be a specific contract where we will require to see at least 20% of UK content in that contract. Okay. So that is a brief overview of how we support businesses either through the banks or through our insurance products. We can also, and there's a slide there which says alternative finance. Yeah, these are, with apologies, these have obviously got a little bit out of order somewhere. So alternative finance. So our role, so we're not a lender. We don't provide grants. but we talk to some businesses where the banks simply don't have appetite, or whether that's based on credit criteria or turnover, however the banks decide, if they are unable to support, then it is really still worth talking to us, because we do have access to some alternative finance providers. Now, for example, under our GEF scheme, we have very recently signed up with Newable Business Loans. This is the first non-bank finance institution to be onboarded. Their focus is on some of the lower turnover businesses. Of course, they apply that against lending and transaction criteria. We can also assist with introductions to alternative finance market brokers. So we can see anyone who's going to lend to a business or take transactional risk. We'll look on the balance sheet of the business, cash flow forecasts, track record, transactional flows, all the sort of good things that the banks and indeed our own underwriters will look at. But we have found, we have supported a number of businesses, and we have seen that there is capacity for good businesses and good transactions out there. We do recommend that if you're in that sort of conversation with us, that you come through us, and we can help make those introductions. So that's a real broad overview of how we seek to support businesses operating in the UK and exporting overseas. We do this through our Export Finance Manager Network, which is showing up there. So we're divided into 3 broad regions: Northern England, Scotland, Northern Ireland, London, South East. I'm part of that team, and the Midlands, Wales, and the South West. And we look at where your business is registered. So if you're registered in Berkshire, for example, I would be your contact. If you're in Buckinghamshire, that'd be Fiona. And if you're in Oxfordshire, then Hugh. But we all talk to each other, so we're all happy to help one another out. So you have my contact details at the end of this presentation. So please do come through me, and I can either put you in touch, or if not, try and help you directly. And I think so these are the export finance managers which exist within UK Export Finance. It's important to note that we work closely with the other parts of the Department of International Trade, particularly the international trade advisors. I know many of you on this call will have had dealings with international trade advisors. You'll also be aware that they've gone through a little bit of a restructure recently. That's now been established. They're bedding that down, and of course they can help provide support in opening doors in new markets, helping you understand tax, legal regimes in other countries, and indeed more broader support in terms of advice in how you can place your products into new markets. So we do work closely together. Our role is really it's very much on the financing side, working together with banks, with exporters and insurers. So I do hope that's given you a good overview of what we do, and I'll be absolutely delighted to take any questions. And I don't know how the best way of doing this, probably if people are happy to submit questions online or
yes,
put their hands up.
they can enter questions in the chat box. I do or the Q&A box, if that's okay for you. First of all, apologies for the presentation. I'm not quite sure actually what happened there. It was fine when Richard sent it to us, so so apologies to you, Richard. We will send out the presentation again. We'll send you a copy of everything, and so it'll be in the correct order. I can guarantee that.
Yes,
so,
always good to shuffle the pack and keep you on the toes, and that's fine.
That's it. It's a trick. So yeah, with regards to the Jeff, which I like the jumbo Jeff. That was I did like that distinction. That was quite good. With regards to the Jeff, obviously with this introduction a year ago, have you seen an upturn in the take up? Has it been proved to be quite popular, or do we still need to get the message out there?
Yeah, that's a really good question. Thank you. It has proved. It has exceeded our expectations. I think we've written, I think, in excess of 100 transactions since this time last year, and its broader application has definitely appealed to the banks we can never really put enough awareness around the product, but certainly we've seen the banks have been really engaged in the uptake of GEF, because they see its broader application, they see the flexibility, and I think a lot more businesses now become eligible to utilise GEF, but because due to the redefinition of the eligibility criteria, which is quite a simple test just to get through the door in the first place. So yes, it's been very well received by the market. I can probably, the point B on that is, as you like the jumbo GEFs, that we haven't seen anywhere near, we wouldn't expect to see the number of volume, but there has been significant value usage under the jumbo GEF, or the export development guarantee, as it's properly known.
And another question, obviously, we know in the past businesses, they've been keen to take up the financial options or the insurance options, but obviously the bank, there's always lots and lots of forms to fill in, etc., etc. Has the process been made easier? In
theory, yes, is the short answer, and through. I mean, there still will be the need for exporter declarations, and the banks will still have their own processes and procedures to establish facility documentation. So I think as a broad rule of thumb, if you're approaching your bank for financing, they'll have their processes and procedures which need to be gone through. If the bank is looking to us for support, there will be some extra paperwork in terms of exporter declarations for things such as bribery and corruption, etc. But nothing that is, it's certainly designed not to be onerous on the exporter. We have introduced the concept of delegated authority, so the banks can, providing that a transaction fulfills preset criteria, the bank can approve a deal in anticipation or knowing full well that our support is there, providing those conditions are met. To the extent they're not, then there is we call it a manual inclusion process, whereby transactions are referred to our underwriters. Typically, this will be where the term exceeds our criteria, or indeed the amount exceeds our criteria. So where transactions looking to go beyond 2 years, or where there's where we're at risk for more than £5 million, then that will have to come to us.
Fantastic. So questions come in. Richard, hello, Richard. Can you please explain how to demonstrate the lack of availability of insurance cover from the private market? I'm not sure if that's something you can comment on.
No. Yeah. Okay. So I think this is a very valid observation. So I mean, we have seen that appetite within the commercial insurance market has tightened, and in response to that, the exit, or the application of the exit, was widened to include OECD markets. Now, that was a temporary measure agreed with Treasury, so that's our response in trying to provide capacity. But we do understand that some insurers may just turn around to exporters and say, look, we're looking to, we want visibility over your whole of your ledger. And it's sometimes very difficult to get that, single name cover. So it's certainly worth talking to one of your export finance managers. There is an application process, there's an early triage process where we try and flush out, is there a possibility for us to look at this, or is it a real no-no? And we can give responses on that pretty quickly. So yes, so we're not an insurer of last resort. Again, it comes down to the point, to do with what is UKEF, what is our mission, what is our authority. It's to support businesses, but at no net cost to the taxpayer. So we have a full underwriting process, and any application will go through that.
Fantastic. Somebody else is asking, obviously you mentioned about various markets and the coverage is quite good, but obviously there's some very tricky markets out there, and Are there any particular markets that are definitely a no-no for UKEF?
Yeah, I mean, there will be countries on the naughty list that, you know, for example, like the North Koreans, where we simply wouldn't be able to take that type of risk. I mean, I think it's always worth talking to your export finance manager, and we can then sound out our underwriters and just get a sense of what we can and can't do. You know, so we've seen, I mean, we've seen a lot of activity in UK, typical UK destination markets. So whether that be Africa or the Middle East. But yes, yeah, certainly for some of the more difficult countries, then, you know, the challenges which exist in the commercial market are going to exist for us as well.
Fantastic. So I think obviously we had some pre questions come in, which I think you've covered most of it, virtually all of it in your presentation. So thank you for that, and hopefully everyone that did submit pre-questions has the response to that. But if not, obviously, please do make contact with Richard after this, or, you know, any questions you can come to us or the list which we'll send out to you. So I'm just going to say thank you, Rich. Oh, hold on, something else has just come in.
Oh, it's nice to see you. Thank you.
Oh, it's a lovely thank you. Well, that's very nice. Thank you. So, yeah. So I'd like to thank Richard for today's webinar, and I'm just going to we tell you that we will be sending out the presentation, and I guarantee it will be in the right order to delegates that have attended today. But I just want to cover a couple of other things in regards to us at the chamber, and like everything, technology. It's not my friend today. Technology is not my friend today. So I'm just going to go back and cover a few more bits from regards to the chamber that we have coming up. So for those of you that are interested, future events, we've got a few coming up. We have some more actually coming in. So internationalizing your online presence at the 30th of March. This will be an interesting one. Post-Brexit, an EU perspective. We have colleagues in Belgium and France, hauliers, customs officers, etc. on the 5th of April are going to be giving us their perspective on what's been happening in post-Brexit. Exporting services, the VAT implications in May, and also how to choose the select international markets for your business. So if any of those of interest to your business or your colleagues, please do visit our website and book on. I just wanted to say a couple more bits about the chamber. As I mentioned before, we do have a huge team of international trade advisors, which is very large in the chamber movement. We offer a wide range of trade promotion and trade facilitation services, but we actually also advise and consultancy on customs advice, any aspects of customs. We are actual customs brokers as well for our sins. International trade to export documentation. The Thames Valley Chamber is one of the largest in the country, centre of excellence for all of these things, and international trade training. And more information on this is available on our website, but I'm not going to push anything else for us as the chamber. This is me. My name's Anne White, as I mentioned, Head of International Trade. If you have any questions about trading internationally, apart from export finance, because obviously that's Richard's area of expertise, please do give us a call or email us or anything like that. So I would like to thank you for attending today. As I said, you will receive a copy of the presentation, and wish you well and look forward to seeing you again at another event. Thank you very much.